Hey everybody, just gonna let everybody join up here a bit, give it a couple minutes. Getting some viewers here. Let's open this thing up. All right, guys. My name is Corey Digi. I'm the director of funding here at Lexington, and to the left of me, I have
Ryan Showe, and I'm the vice president of sales at Lexington Capital.
Today, we're going to talk a little bit about what every business owner needs to know before applying. So, going to give you guys some tips and tricks, and maybe a bit of a roadmap as far as from the identifying your goals all the way down to who you select to move forward to give you the best financing product for your ultimate goal at that time. Why don't you take us off and start us on our first point, Ryan?
Yeah, for sure. So the first thing that every business owner needs to take a look at when they're applying for financing is just identifying their ultimate goals. What are you looking to accomplish? How quick does it need to get done? And ultimately, what steps are you going to take to make sure that your business gets the financing that it needs and in a timely manner? Because I'm sure, as you know, financing for business owners, it's a very unique industry that we're in. There's so many different avenues to obtain financing, and sometimes it's almost overwhelming for the borrower to make sure that they're making the right decision.
Right.
Which is where we come in and help.
Absolutely, 100%. I couldn't agree more. And realistically, again, really the first point to identify is what you're looking to use the money for is really where you need to start in the whole mix, right? So you're going to want to make sure that you guys are understanding what you're first looking to put the funding towards, right? You don't want to just look to, I heard that we're looking for financing. I heard that we're looking for, I heard about a line of credit program. I heard about an SBA loan, and we just want to get it to grow the business. You don't want to go in blind, right? Firstly, you want to identify where exactly you want to put the money towards in order to specifically grow your business in that specific field, right? So at that being said, you're going to look a whole lot better on paper approaching, specifically traditional sources of lender with an ironed out use of funds that if I borrow X to purchase X, Y, and Z, I can make this much of a profit, right? So that just makes a lender feel a whole lot more comfortable with you, specifically when you're shooting for a more traditional type of a product. And really identifying from there your use of funds. The next thing that comes into place is how quickly does this need to get done, right? Is this a do or die in the next week, or is this something that's an opportunity that may be on the table for the next 6 months, and you can put the time and effort into qualifying for the right product that you can ultimately get, right?
I think one thing we should definitely touch on is some of the biggest use of funds that we see and why people are borrowing financing.
Right.
Some of the biggest things that we see is purchasing equipment, repairs on equipment, cash flow concerns. Unfortunately, a lot of businesses are running into payroll concerns as well. Every situation has a unique product that fits those situations better.
Right.
For example, if somebody is worried about whether or not they're going to be making payroll on Friday, you're not going to the bank and putting in an application for a 6-week long process when you need to make payroll by Friday.
Absolutely.
That's something where you would go to an alternative market and look to find the best deal over the quickest time of funding that's going to get your goals done in a timely manner.
Right.
And that's a big thing to understand. A lot of people don't know that applying with your local bank or a credit union or even Chase is a 6 to 8 week process.
Right.
And unfortunately, some people can go and apply with those banks and not realize what they're getting into and ultimately shoot themselves in the foot when they could have came to either me or you and gotten financing same day.
Absolutely. I couldn't agree more. Realistically, that's why it's really important to first identify your use of the funding,
Exactly.
right? To know that you need the money by this week, you may not need it at all right? So understanding that will really help you identify the approach that you should take to acquiring the business funding that you're looking for, right? So again, secondly, that timeline is really what's going to help you identify which route to take. So thirdly, right, depending on whether this is a do or die, we need to get this done this week or not, if this is something that we have some time, Third step I like to tell everyone is to start to identify your own qualifications and look at your own file from the outside in and ask yourself, how does this look to lenders, right? As far as credit score, credit utilization, money that's coming in, money that's being held, money that's being reported as a profit, money that's not being reported as a profit. All of these things matter crucially determining the product and program that you're shooting for. But understanding that you don't go into a program that you're shooting yourself in the foot for from the upfront because the qualifications don't align, right? Because we run into this time and time again where borrowers are shooting for products and programs that they just simply cannot qualify for today. But it doesn't mean that 6 months from now that same opportunity will be right in front of them and they can qualify if they do the right steps necessary to get there.
Absolutely. And one of the biggest things to kind of touch on after that, me myself, I've funded over 1,000 businesses personally. I'm sure you're right around the same, if not more. My best borrowers understand the type of financing that they're looking to obtain, right? They know what their qualifications are. They're looking at it from the other side of the table.
100%.
There's a lot of people as business owners that will look at it from just their side of the table and say, I need the cheapest rate, I need the longest term, and I need it done right away.
Right.
Unfortunately, when you're looking into financing, you have to consider the entire underwriting process as well, right? So that's one thing to understand. And the ones that can seem to grasp that ultimately end up as a happy borrower and are excited to be able to continue to build a relationship with a lender that fits their business model.
Right. Absolutely. I couldn't agree more. And really, business financing comes down to, it used to be a whole lot more simple, right? 20, 30 years ago, there was a lot less businesses. Internet was not prevalent, so fintech was not a thing, and it used to be small banks that had these business owners' backs. It seems as though that over time, with the amount of businesses that have been open, it seems as though the risk has increased, right? So because of that, the banks have tightened up, and alternative lending has became, from my opinion, the strongest source of financing for small to medium-sized businesses right now, because of its availability, right? Because of the fact that most business owners at that 2-3 year mark are usually leveraging their own resources in order to get there, right? Their own credit score. Some of them maybe even took out a second position on a house, or maybe took a HELOC, whatever it is, right? They have utilization against them, which is holding them back from qualifying for now the traditional business loan that they could have qualified for if this wasn't the case, right? But doesn't mean to say that with the right steps taken in the right direction, this couldn't all be corrected in a short period of time and get our borrowers on the track that they're looking to be.
For sure. And two things to touch on about that, right, is a fun fact that I tell most of my merchants when I'm speaking with them is that 86% of small businesses don't make it to that 2-year time in business mark.
Right.
Funding a business less than 2 years time in business is very high risk. And it doesn't matter what industry you're in. That goes for everything. There's so much competition in every single industry that it makes it tough to be able to fund businesses like that. There's another point that I wanted to bring up, but I kind of got sidetracked. I don't remember, so I'll let you kind of pick up on my mishap.
Perfect. So essentially, I couldn't agree more with the thought of really knowing what your qualifications are before you go into this process is what's so prevalent, right? So you want to know that if you're going for an SBA loan, that you have the profit on paper to show this on your tax return, right? If you're looking over the last few years to save the money on taxes and buying equipment for depreciation and to write off the value of it, you're going to be upside down on the tax return, and it may not add up for you to afford this loan on paper. So
Absolutely.
at that, right now is really one of the best times to be having this conversation with borrowers, because let's call it what it is. The more profitable businesses are on extension. And they're looking to file tax returns between now and October, the next month, right? So At that being said, right now is the right time to be having this specific conversation, so that 24 tax return can help your business qualify for what you're looking for ultimately, right? Absolutely. So this is the time to have the conversation.
For sure. And I'm glad you brought that up, because it actually jogged my memory about what I was going to say. Most people get into business to avoid paying taxes.
Right.
But unfortunately, what they don't realize is when you're not showing a profit, more traditional lenders do not want to work with you. They want to work with profitable businesses.
Definitely.
So it's one of those catch-22s where, all right, do I want to be profitable and obtain better financing? Or do I want to show a loss and then I'm going to be hurt when I need financing later on down the road?
Right.
And unfortunately, a lot of people don't understand that because they're not doing financing every single day.
Right.
They're busy running their auto body shop. They're busy making sure the restaurant is stocked up properly. They're busy making sure their trucking company has all its trucks on the road and nobody's breaking down.
And let's call it what it is. A lot of the small business owners are hand to mouth these days, unfortunately, based on the economy that we're in, how expensive things are, profit margins are thinner, tariffs are in place.
For sure.
And with that hand to mouth, it's like sometimes there might even be a whole lot of profit left over on paper, right? And it might not be an option, right? And that's, again, where the alternative lending space comes and provides value for when the opportunity is there for the right use, right? Because at the end of the day, it's not a one-size-fits-all product, but it's very useful based off of its availability simply because 9 times out of 10, when you want to qualify for a more traditional product, there's something that's holding you back. And if there's a specific time frame that you're looking to accomplish your goals by, it's likely that that alternative is going to be your best bet to make it a do or die, right?
Absolutely. And I guess that is going to bring us into our next topic, and it's making sure that you're working with the right source.
Right.
So one of the biggest things about our industry is it's extremely oversaturated. There's a lot of people that do what we do and offer the same type of financing that we offer. But unfortunately, with the industry not being as regulated as most industries are these days,
right,
we get some bad apples. And it's tough to determine who is legitimately looking to help your business grow and who is just looking to make a quick buck. That's why I always mention to all my clients to do a little bit of research in the companies that you're applying with and make sure that you understand what other people's experiences look like.
Right.
I'm sure countless of times you've heard of these crazy like pressure sales tactics that people are putting on people, the misleading people, the promising them in hopes of getting something better.
Absolutely.
And by the time they get to me or you, the bridge is burned. They're not going to have that level of trust and that level of comfortability because of their past experiences, which is usually a very tough thing to break into somebody. I mean, fool me once, shame on me. Fool me twice. It's tough. It makes it a very tricky situation.
Absolutely, 100%. And these guys are everywhere, right? They are taking advantage of small businesses, and it's an unfortunate to do, but in every industry there's bad guys, right? So
absolutely,
unfortunately, our industry, it's more times than not these guys are looking out for their best interest, not looking or caring about a long-term relationship, and looking to make as much money as humanly possible off the singular deal they're talking about that day, right? So they're not looking down the road. Whereas companies about the longevity are going to help you get the best result. They're going to help you build the game plans to get you built to where you want to be, and not just your today's goal to buy that piece of equipment, but help you accomplish your 5 and 10-year game plan goals to help you get your business to the evaluation you hope it to, so you can cash it out and retire, right? That's the end game for a lot of these guys.
Definitely. And to spin off something that you said earlier, really making sure that, if you may not qualify for what you're necessarily looking for today, a company like ours that's more concerned about making sure that you're ultimately happy as a borrower,
right,
we're going to coach you and we're going to guide you to get to the steps that you need to be, whether it's taking out shorter term financing because it's going to fit your needs right now. And then once we work on maybe say your credit and get you to a higher credit score, then bring you to a more traditional product,
right,
to then pay off your short-term debt. I mean, we have situations we come across that all the time. And, it's one of the best things about what we offer, all these different programs. We have a home for everybody, whether you have a 400 credit or you have an 800 credit, there's something that we can do to help obtain financing. I mean, we've gotten businesses that are pre-revenue,
right,
$100,000.
Totally.
And to be able to have access to something like that can be very beneficial for a lot of people.
Absolutely.
You brought up the point of everybody over leveraging their credit when they first start up. They wouldn't have needed to do that if they had a trustworthy company like ours to be able to fall back on and point them in the right direction.
Absolutely. And I think that really what that comes down to is that a lot of these smaller brokerages are trying to make that money today. They need to make that money today in order to keep the lights on. They may not have the deal flow that a company like ours has, and unfortunately needs to make everything they can, right? Whereas at a company like ours, we're servicing businesses like NFL superstars and full-fledged grocery stores and franchises, and all the way down to your mom and pops, your mom and pop, handyman that is home based, right, with a $10,000 a month revenue base, right? So
even your single truckers.
Exactly. So any small to medium sized business really in America today is getting value through our platforms and platforms aligned that are doing this with the right tenacity and the right transparency to help guide you to the goals that you're really looking to accomplish, right? So the first step to vetting your broker is doing your own research, really. Just first, if you can't find the company based off of a simple Google search, it's a huge red flag, because for this industry, you don't walk in the door of our office and say, hey, I need 100,000. You do it online, you do it over the phone, right? So our Google page and our web presence is essentially our storefront. So we take it very seriously, and we know that the strength of that, the amount of marketing dollars that get put into that, the things that people are saying about that company via reviews and articles and all other online sources are really what's going to lead you to understand if this is a reputable company or not, right?
For sure.
So, and not to say that we're the best, but we are the best.
Absolutely.
There's plenty of other companies alike that have the transparency and credibility alongside of ours that will help get other facilities done that are out of our reach, right? Whether it come down to your long-term projects, their private equity, or whatever the case is, right? There's a whole lot of these guys that are over the phone and promising the world and charging upfront fees and disappearing off of the face of the grid. And it's very unfortunate. We see it time and time again. And I'm constantly educating borrowers and clients alike to be wary and to make sure you do your research before you engage or give any personal information of yours to somebody that may or may not be trying to work against you. You better be safe than sorry and do your research on the upfront before you're sorry later on.
Another thing to consider as a business owner, if you're looking to obtain financing, me personally, I always recommend that my borrowers get a different opinion. I don't want you to just hear what I have to offer. I want you to go to other people and see what they can offer as well. Because if somebody is willing to give a better deal than what I'm able to provide for somebody, I'm telling them to take that approval. I'm not worried about losing one sale, because ultimately I want what's best for the client. And when a client sees that and understands that and recognizes that we're genuinely looking out for their best interest, it's ultimately going to lead to more sales in the long run. Doing the right thing by your borrower is only going to return and repay you more. Don't get me wrong. You may lose out on a sale here or there, telling people to go shop around and seeing what else other people offer. But the more times than not, you're going to win, and you're ultimately going to get that client for life. And that's what this industry is about. It's about your renewal book. It's about people that you can fund multiple times, bring to different programs, and continue to have a long-lasting, established relationship with them.
Absolutely. I couldn't agree more. Realistically, we're looking to build a long-term relationship to build these clients to where they're looking to go long-term, right? And if it comes down to the wrong broker with an overpromise and a hope and a dream and take this out and 30 days later we'll refinance you, it's, if I had $1 for every time I heard that, we might not be talking right now. And it's unfortunate because, again, it's mom and pop shops. It's people like you and I every day that are getting taken advantage of that just don't know any better. And just like you mentioned before, they get taken advantage of, and they give the whole industry a black and blue eye, and they essentially, have that guy win twice and hold them back from opportunity in the future based off of getting, ran over by the first broker. And it's definitely unfortunate. We see it every day. And the biggest thing is to circle back after that happens and say, oh, maybe I should have seen that red flag. This guy didn't have 5-star reviews. I couldn't find his company on Google, and at that, when you can identify and move forward and help your business grow under the right terms, that's what it's all about. Right.
Yeah. And then one big tip I'll kind of leave you guys with, if there's anybody in here that has their own broker shop, or maybe they're considering starting their own broker shop, how many deals would you say you win just by having people check our online credibility?
Yeah.
A lot. Definitely a lot of deals are won through that. So if you're considering getting into this industry or starting business financing, take those wins when you're able to help a client and get a little bit back and help yourself win as well. Tell them to leave you a review. Tell them to talk about the great experience they had. It's only going to help you ultimately win more deals in the long run. I know, as far as, we're a telemarketing company essentially, right? We're doing a lot of outbound calling. The fact that our reputation is so strong speaks 10 times thousands of better opportunities for people, because they see all the other people that we're ultimately helping out. And that alone is just one of the most valuable tips that I can leave somebody who's looking to get into the industry with.
Absolutely. Couldn't agree more. And, again, we're happy to help, with tips and tricks. Doesn't really seem like there's any questions. So I think we'll leave it on that thought. Once again, we're happy to conclude with what every business owner should really pay attention to before applying. If you guys like what you saw here, please like, comment, subscribe. And Ryan and I are looking forward to giving you a whole ton more content just like this.
Yeah, absolutely. Thank you guys for joining.